Hello and welcome. You have tuned into Buy Now Sell Now on ET Now. I'm Shrishti Sharma and with me Shell D'Souza. And viewers, in this show you get answers for all your stock related queries. In a short while from now, we will connect with our experts and open the floor to get your stock related queries answered by our experts. But before that, a quick look what the markets are up to. So Cheryl, the first day of the week and seems like we're in for a volatile week because Nifty as well as Bank Nifty both are pretty volatile, and the bad news and the stocks related to that are getting punished quite in a quite fashion in today's trading session.
Absolutely, a very good morning to you, Shrishti. If you look at the markets, but it's been a steady recovery from the day's lowest point. If you see for the Nifty Bank, at least the Sensex is in the positive territory, but no doubt, yes, it has been volatile morning of sorts when you talk about the way how the market has been going. But a lot of companies are in focus and that is primarily on back of their earnings. You have HDFC Bank right now ruling the Nifty charts because it is the top gainer on the Nifty, seeing gains of about 3.9% on back of its earnings. You have Bajaj Auto that's staging a rebound once again. Remember, last week was pretty bad for this one. Eicher Motors, Tech Mahindra in focus. Tech Mahindra is reacting to its number. HDFC Life is also holding on to good gains, about 1.4%. Talking about the losers, then you have Tata Consumers. That is the top loser on the Nifty. 9% downtick coming in for Tata Consumer on back of its earnings. Kotak Mahindra Bank reacting to its earnings as well. 7%, almost 7% downtick for that one. BPCL, IndusInd Bank, ONGC are the other set of losers. Talking about the sectoral print then and how are the sectoral indices looking at this point in time. Actually, you only have auto that is seeing a shade of green. Actually, no. You have the BSE auto index in the positive territory. Nifty auto index is up about 0.3%. The top sectoral gainer in trade today. You have realty that's seeing some shade of green, but yes, a pretty flat in trade. FMCG is the top sectoral loser, 1.13% downtick for that one. You have metals, you have PSUs, you have the broader markets, all of them under pressure in trade today. So yes, on the surface, if you look at it, Shrishti, the advance decline ratio also is not that supportive at the moment for the markets.
Well, certainly, but let's put the spotlight on the Tata group of companies as well, because as per sources, RBI has turned down the request for exemption from mandatory listing to Tata Suns IPO. But what would this IPO mean for Tata Sons and for the group companies that hold stake in the parent? Let's revisit Nikun's take on the same.
This really could be the story of the season, so to speak, that Tatas have to prepare for listing of Tata Sons. Let me just put some backdrop here, what is new and what is old and what could happen. So the context here is that Tata Sons is an NBFC. Why are they an NBFC? Because Tata Sons, with its capital, they are financing and they are in a sense giving loan to other Tata group of companies. So technically they qualify as an NBFC. The RBI guidelines are very simple, that if you're an NBFC, you have to follow the RBI listing norms. And if you have a debt, you need to again stick to what the guidelines are. Tata's in a sense appealed to the regulator, which is that, look, we don't have debt and we should be given that concession. The story here is that Tatas have not been given any kind of a concession. And again, this is source-based story from Reserve Bank of India. The regulator is very simple. The law of the land applies to same. Nothing new, nothing different. You may not be in a public lending business, but you are ultimately lending. That means, and again, this source-based information. Of course, we got no report from Tata's and Reserve Bank of India when we approached them. But it could well happen that Tata Sons now will have to list itself before September 2025. Now, this could be a listing by choice or a listing by compulsion. In this case, this could be a listing by compulsion. And that really would change the dynamics for a lot of companies, at least in the short term. First, it would change life for Tata companies where the ownership of Tata Sons is there. Tata Steel, Tata Chemical. So this is what Tata Sons owns. First, what will change is for companies where Tata Sons, companies which have ownership of Tata Sons, and that would include the old boys. Tata Motor, Tata Sons, Indian Hotel, and I think Tata Capital. So Tata Investment. Those are the companies where the investment holding will change. Second, Tatas can of course go back to Reserve Bank of India and they can appeal again. So this listing may happen, may not happen, but as of now where we stand, what we know is that Tatas have got no concession from the regulator and they will have to list as per the current available information. The big re-rating will happen for companies which own stake or have shareholding or common shareholding in Tata Sons. Tata Sons is the mother company which has holding in every group company. Nothing changes for them, but companies which have Tata Sons in them, and that's the list which I wanted. Tata Steel, Tata Motors, Tata Chemicals, Tata Power, Indian Hotels. The big one really could be Tata Chemicals because of the market cap and the holding value. I think the holding of Tata Chemical or Tata Sons in Tata Chemical is almost equivalent to the market cap is what I understand. For Indian Hotel also the move could be very large. Tata Steel and Tata Motors, of course, there are large companies, so the holding A is less, and its percentage of the market cap, the impact would be less. But the big hurrah could be Indian Hotel, Tata Chemicals, then Tata Power, and finally Tata Steel and Tata Motor.
All right, so that's the take coming in from Nikunj Dalmia on what if Tata Sons goes in for an IPO, what would it mean for the companies that hold stake in Tata Sons as well. We have our experts today, Kunal Bothra as well as Gorang Shah. And let me take this question to you, Gorang Shah. If you've heard Nikunj's take as well as the story that we've been covering at ET now, what's your take coming in for the Tata group of companies and the future going ahead?
That's $1 million question, isn't it, Cheryl? It's a work in progress still, to be very honest. And I agree with what Nikunj has just elaborated in terms of the understanding. So I agree with the fact that all those companies which are listed have holding in Tata Sons in case if this company has to go public going forward. Then and only then those companies will tend to benefit in terms of value unlocking. But the big question is whether there is any kind of recourse that the management has of Tata Sons to go and appeal against this, and whether they can possibly, have a status quo for some time. Then it will depend, Shalil, in terms of valuation, because we all know the valuation in terms of what our understanding is for Tata Sons. And during this process, I would also mention that all these companies will have its impact depending upon which way the news flow is. For companies which have a larger interest in Tata Sons, which are listed entities, would tend to benefit. For those with lesser interest or few kind of stake, would have its own impact on that. But my sense is that unless and until we get clarity of this entire process, I'm not too qualified to take a short-term call because it's going to be very difficult for me to do that. But on the fundamental side, I think I will really wait for the entire news flow to develop as far as clarity from the management is concerned, and of course the way forward in terms of valuation, etc., etc. As a disclosure, we do have coverage on some Tata companies, but I think it will be a little bit premature to take a call and give an investment advice on fallback of the news flow or the event that has unfolded this morning, Sharon.
All right. Key to note is that all these companies do have sound financial history, but at this price point and given the news flow, it's to comment on the fundamental side will be a little tough, but let's wait out for more clarity. But Kunal, all these counters have reacted sharply on the back of the news flow, and some of the counters that even Nikunj was highlighting, be it the likes of Tata Chemicals, Indian Hotels, as well as Tata Power, are up in trade today. Any stock that stands out for you for the short-term period? Any bets that you would like to highlight for our viewers?
I think out of the names, Tata Power is something which is looking attractive. The stock at 450, 460 levels is one of the less volatile ones. Let's put it that way, as compared to the rest of the pack. Because the likes of, for example, Titan, we've seen Tata Motors, all of these stocks have fallen very sharply in the last 1 week, 3 weeks. And looking at the way these stocks have or the charts have panned out, there could be a case where these stocks may take some bit of more time into settling into a trading range. So out of the Tata Chemicals, for example, even after today's up move of 10% plus, it still remains to be a very volatile stock. So the stock could probably swing those moves of 5% to 10% in a very short span of time. So I think that's the only reason why I would probably just stay away from Tata Chemicals. But as of now, Tata Power seems to be one of the more formidable ones.
All right, so that's the take coming in on the Tata Group of companies. But on that note, we'll slip into a break on this edition of Buy Now Sell Now. When we come back, we will start taking your query, viewers. Don't go anywhere. Welcome back. You're watching Buy Now, Sell Now on ET Now, a show where we get you answers for all of your stock-related query. Remember, viewers, you can connect to us on the WhatsApp number that's flashing on your screen. Do remember, each time you write to us, mention your name, the stock that you're looking to invest in. Mention that as well. And if you've already purchased the stock, mention the buy price, the quantity, and the time horizon. In that way, it will help our experts to give you the right advice in the right direction of that particular account. For your short-term to medium-term queries, we have Kunal Botha who's joining us on the technicals. For your long-term fundamental-based stories, we have Gorang Shah who's joined us on the show. Once again, very good morning to both of you. And also a quick note for all of our viewers that we will not be addressing any penny stocks in the show, so please do not mind if we will not be able to take those queries on board. But let me take the first query that I have, and this first one is coming in from Ghosh Dada, who's just returned from the United States. Good to have you back, Ghosh Dada. He's a regular viewer of our show. 500 shares of Bajaj Finance. He is in profit. He can hold on to the long term. He wants to know what's the future for this one. Gorang, let me come to you because he saw you also on board and he said that you are one of his favorite analysts and he's so happy to see you back on the show. And he's also asked, hope you're fit and fine.
Thank you so much, Ghosh Dada, for all those kind words. I also hope that you are doing fit and fine. So from a long-term point of view, we had been covering Bajaj Finance from a long-term point of view. I'm sorry, but I couldn't get the purchase price, Cheryl. But anyways, notwithstanding that.
Gorang, he's not mentioned the purchase price actually. He's only said that he's in profit. He has 500 shares of Bajaj Finance.
Oh, so God bless him that he's in profit. Good to hear that. So from a long-term point of view, expect the companies to do well. Bajaj Finance, I think it's one of the best companies suited, if you want to play an urban, semi-urban and rural play in terms of reach out for providing financial assistance for various needs that any, individual has. They have different types of ticket size from small to medium to large. There were concerns some time back, but I think the company has given due diligence to what was said. And they have said things right. If you ask me in terms of targets, currently, we are looking at somewhere close to about 7,200. So, Ghosh Dada, I think if you are a long-term investor, I would advise you to hold on to it. And possibly, if the earnings are better than what our estimates are, and if it is credible enough to increase the targets, we would definitely do that, Cheryl, from a long-term point of view. But hold on.
All right, that's a hold coming in on Bajaj Finance. But Gorang, one more query coming your way, and this one is on Manapuram Finance because just last week, the stock was under pressure after RBI's action on one of its subsidiaries. And Yuvraj is saying that he has bought 1,000 shares and his buy price is 180 rupees. He can hold for the long term. So Gorang, what will be your view and advice for him?
So, Manapuram, I think first of all, all the gold loan companies, especially, Manapuram and Muthoot, they have a little bit of issue with respect to what the, RBI tells them or what the regulators tell them in terms of straightening up their lending norms, which was an issue. Currently, we used to have coverage on Manapuram some time back, but we have withdrawn that coverage right now. Currently, it's under review. And since it is under review, I think I won't be in a position to give a clear-cut advice over here. My sense over here is that if you are going to consider gold as an asset class to invest in a gold loan company, then, as a fundamental advisor from a long-term point of view, I would tell you that why don't you take a call on gold itself? There are gold ETFs listed, wherein you negate the corporate-related issues, governing issues, which, the regulator comes down sometimes on and off and gets them into place. And I think given the kind of movement of silver and gold, and these are the two commodities along with equity that I have kind of done a little bit of study more on the gold. So if you're keeping gold as a base to invest in a gold loan company, I think it is better to look at gold ETFs. I think there are 12 gold ETFs listed, if I'm not mistaken. And that would be a better place to be.
Gold ETFs would be a better place to be rather than these gold loan financiers companies. Kunal, you also track gold very closely. Any targets that you set for this one? Because the precious metal is only shining bright day by day, given the fact that you have it now at record high levels approaching 80,000, I believe, per 10 gram.
Yeah, approaching those higher levels, and that too with the cut of the duties which had happened in the previous budget. But I think nevertheless, I think on the dollar charts for gold, we are at 2,700 plus levels for gold. It looks like that maybe the asset is getting into a bit of an overbought territory. But maybe this with the inertia movement and the momentum on its side, you might probably expect the dollar prices for gold to maybe hit 2,750 to 2,800 levels. But I believe at current levels, initiating a buy in terms of an asset class at such kind of steep RSI levels is a bit of a skewed risk reward.
I'm not sure if the women out there will listen to you when you say that whether they should go ahead and look to buy gold or no, because given the fact that festive season and you have a lot of actually demand coming in. In fact, 2 weeks ago when I was in Pune, I actually saw people coming in at a time when the festive season had not even started. So yes, gold definitely is all glittery right now. But Kunal, what about HDFC Bank then? So that has about some shares that she's holding at the price of 1,540 rupees per share. What should she do?
Well, I think finally today seems like a strong potential breakout day for HDFC Bank, because the stock is not just outperforming from the rest of the peers, but this could potentially get back the stock into a zone of a strong string of outperformance. So we've seen HDFC Bank underperforming significantly over the last 2 to 3 years. The stock has time and again disappointed at the 1790 mark. Even the last 6 months or so, there have been 2 attempts for the stock to scale above the 1800 levels. Both these attempts failed for the stock. This could be the third potential attempt for HDFC Bank. And I believe that if that happens, then we could be looking at a potential big breakout for HDFC Bank. So long-term if you are holding on to the stock, I would suggest to continue to hold on to it, to the same over the near to medium term.
Right, that's the take coming in on HDFC Bank, the top gainer in Nifty 50 today. But moving on, the next query that I have, Gorang is coming in on Bajaj Housing Finance, wherein Sunita Rai from Bangalore is wanting to invest afresh in this particular counter. Would you advise to enter even at this price point, or wait out for some dips? Any levels that you can highlight for her to go ahead and make a fresh investment?
Srishti, on the fundamental side, we have coverage on 2 housing finance companies. First one is Canfin Homes and the second one is LIC Housing Finance. We had given a miss to Bajaj Housing Finance in terms of coverage. But I mean, having said that, it comes from a very strong corporate house. It's got great outlook. Business commentary is concerned during the IPO and post the IPO, the management has given a run rate of anywhere between 12 to 15% growth per annum, which is going to be very, very strong driver for earnings to come through. Second positive that I would possibly look at going into the future, Srishti, is that if we gonna have rate cuts possibly by this year in December 24, or maybe early part Jan, Feb, March 2025, then this will augur well for housing finance companies because that's a great kind of a trigger or a tailwind positive for loan book growth. I'm not saying that this company is not good. It's one of the good companies and comes from a great corporate house. But my problem is I am restricted to comment. Comment only on companies which we have coverage. So if you're not invested in this, I think Canfin Homes or LIC Housing Finance could be a better choice.
All right, let's take the next query then. And this next query is coming in from Subrata Mukherjee and wants to know, Kunal, whether he should go ahead and buy Coal India and exit ITC.
Well, not to exit ITC, but yeah, I think Coal India could be a good bet from a longer term play. I think the charts for Coal India on the monthly time basis chart, from those 2022 lows when the stock started to rally and then formed a major uptrend. I think from that kind of a time frame, it looks like that the stock is looking very attractive from long-term play. Now, the last 3 months, the stock has corrected. I think the correction has already been more than 10% for Coal India from 540, 550 approximately to 480 levels where it's trading right now. So, I think at current levels, a stock like Coal India could be considered as a good bet.
All right, that's the take coming in on Coal India. But the next query, Kunal, is coming in from Sandeep. Wants your take on UBL, holding 65 shares. His buy price is 2,052 rupees. What's the long-term view on this one?
See, I think the stock is going through a broad-based consolidation. I've seen the charts for UBL over quite a long time frame, and looking at the recent charts as well, the stock is tapping back into a support territory. So I think this 1900 mark is a strong support territory for UBL. On the upside, 2100, 2200 has been a resistance. I think the stock has tested 3 times in the last 6 to 9 months. So it looks like the stock is going through this 300 point range. Closer to 1900 is what I believe you can look to average for even a modest target or a short term target of closer to 2100 odd for the stock.
Kunal, I have actually a couple of queries, and in fact this is not today, it's been over the last 1 to 2 weeks that we've got queries non-stop of Reliance Industries. At least 7 to 8 viewers each day write to us asking about Reliance Industries, what the way forward. Today both of our viewers, one is coming in from Mr. Preetham Chatterjee. He has Reliance Industries, he got stuck at about 3000 levels. How much more time can we expect for the stock to go ahead and revisit that level? And the other one also is coming in from Rajesh V. He has 100 shares of Reliance Industries purchased at around 3010 rupees per share. So wants to know by when can we expect some rebound to come in the counter?
See, I think the recent charts for Reliance Industries are not very positive, and especially with the fact that the stock has broken significantly below its long-term moving averages. And we've seen historically that when stocks fall, and especially when Reliance Industries have fallen below its long-term moving averages, there are points when the stock goes into 1 to 3 months of price correction. That doesn't mean that the stock goes into a steep price correction, but the time spent below the long-term moving averages makes the investors as well as traders patience being tested quite significantly. So I believe in that sense, you might probably expect the stock to drag at this 2700 mark. So price wise, yes, the 2700 levels could be attractive given the way the stock has panned out over the last 1 to 2 years and the longer term time frame charts for Reliance Industries. Of course, it's a quality name to have as part of your core portfolio, but just based on this recent break below the long term moving averages, and even the instance of a death crossover where the 50 DM moving average is now falling below the 200 moving average, that also could probably put some pressure on the stock over the near term. So expecting the stock to drag.
Just trying to take the clock back actually for Reliance, Kunal, because I believe certain similar sort of patch was seen even during 2016-17 or so, right? I think the stock started moving higher post the Jio launch date, isn't it? Yeah. Around that time, I think, because a similar phase of Reliance Industries where it would do absolutely nothing for about 6 to 7 to 8 months, and then all of a sudden you would see a bounce back, and then you would think that this sort of a rally would continue for the stock going ahead.
No, in fact, I remember that data point from 2007 to 2017. There was a 10-year period for Reliance Industries where the stock, adjusted to the current values, was stuck into a 200-point range. Now, it was 550 to I think 350, 400 approximately for Reliance Industries at that point. So, when a stock goes into those kind of cyclical tendencies, it has this habit of getting into an odd phase of correction. But if you're a long-term investor, of course, buying the dip is a very good strategy. But if you're a short-term trader, then you could, you may probably get a bit nervous, because if the stock remains into lower end of the price range, you might probably expect that when could the momentum come back again. So, if you're a long-term investor, then I think buying the dips could be a good strategy. Short-term investor-wise, I think the stock may drag a bit more.
So is that chart on the screen a clear depiction of what you were trying to say? From 2010 to 17 did absolutely nothing, and then the jump come in.
Exactly.
Right. So, but the key is not to be perturbed by this sort of a move in Reliance Industries.
Yeah, these short-term moves, these short-term corrections would keep on happening. That's part and parcel for even every stock, every asset class at play. So I think if you're worried with a short-term play, if you're expecting that when the stock would come back into the 3000 mark, that may not be a better strategy. It's best to try and look at that this stock is a quality and you should hold on to the stock from a long term.
Gorang, you want to add anything on Reliance Industries?
Well, I think this stock is going to be on each and every fund manager's buying list, Cheryl, and of course large investors as well. So let me give a disclosure. We have a target somewhere close to about 3,400 on Reliance Industries from a long-term point of view, and we've been covering this stock for many years now.
All right, so that's the fundamental as well as technical take for both the viewers, short-term as well as long-term investors on Reliance Industries. But with this, viewers, it's time to slip into a very short break. Don't go anywhere. We'll be right back to take more of the stock-related queries. Welcome back to Buy Now Sell Now, a show where we get you answers for all your stock related queries. And continuing the same, Kunal, I'm coming to you for the next query. This one is an F&O query coming in from Manish Bhatt from Ahmedabad. Holding 2 lots of Vedanta, September expiry, and his buy price is 503 rupees. What to do in this one? Should he go ahead and book out the loss, or maybe look to roll over for the next expiry? I think that this one could be the October series that he must be talking about, right?
Yeah, looks like October series, for the stock, and I think now at current levels of 475, 480 for Vedanta, I would believe that you should need to have a stop loss for this trade. Because the stock may swing either ways at current levels. It's bounced off from the Friday's low of 460, which is also the 50-day moving average for Vedanta. But on the upside, the stock is definitely facing resistance at this 485 to 495 range. So, which means that the stock may just about try to consolidate for some more time. I believe that keeping a stop loss, say of 464, could be a play for Vedanta. In the meantime, what you can do is, in case if you are playing with the risk of another 15 odd points, you may look to hedge your positions by buying an at the money put option for the stock. That could probably curtail the risk to a larger extent, but I think stop loss of 464 is what you need to maintain for the stock.
All right, this one is coming from Deepika Shah, who is a senior citizen, Gorang. Deepika has about 100 shares at a price, 100 shares of IRB Infra at a price of around 29 rupees per share. She's saying she can wait for the long term. The stock has been moving pretty slowly. She is in profit, key to note that. What's your take coming on IRB Infra?
So we like the infrastructure and engineering space from a long-term point of view, Cheryl. But my limitations are that we don't have coverage on IRB Infra, but we do have coverage on related companies in the sector like NCC Limited, NBCC, PNR Constructions, for example. And the fact of the matter is that, look, India is growing at a decent pace, and to support that growth rate, we need to create new infrastructure. And of course, along with that, we need to modernize the old ones. So we are positive on companies like NCC, NBCC, and of course PNC Infra. And if you're worried about that your investment is not really moving and you are in profit, if wisdom prevails upon you and if you want to make a shift, then I think it is your choice. But I think the infrastructure space is going to do quite well given the kind of outlook of the sector.
All right, that's the take on IRB Infra as well as the sector. But the next query, Kunal, is coming from Siddharth. And first of all, he's mentioning that he's a huge fan of yours. And now he wants a technical take on PNB Housing Finance with a 6 months time horizon. Holding from lower levels is what he's highlighting. PNB Housing Finance purchased at 910 rupees. What's your take on this one, Kunal?
Thank you so much for that. So I think on PNB Housing, I would believe that the charts on the short-term basis are looking a bit more, I would say, range bound, because the stock at 920, 925 has gone through one of the sharpest corrective phases in the recent past from 1200. Just about, I think 2-3 weeks back, the stock has fallen down towards this 920 odd levels, which is a decent correction of almost 20% for the stock. Now, in that sense, maybe the stock could get or the fall could get arrested. The stock may remain into a range. I believe that if you've bought at lower levels for PNB Housing, you can continue to stay put. The rally which had happened for PNB Housing and the move which had happened towards the 1200 mark was on the back of some extremely strong volumes, which means that whenever the volumes make a comeback, the stock would at least retest at 1200 levels or scale past about those levels. That could take a process of another 3 months or so at least for the stock, depends on when the market gets into a recovery phase. But I believe that it's a good chart from a medium to long term play. You can continue to stay put.
All right. This next query that I have is coming in once again for you, Kunal, because this is from Indu. She wants a technical view on Emphasis and MAPA India. Emphasis she wants to enter, while MAPA India she's already holding the shares with 60% profit, wants to add some more.
So, would not suggest to add MAPA India at current levels, but because the stock again is just about getting into a very lull kind of a phase, there could be a possibility that the stock may retest the previous lows of 2000. So maybe 2000 could be a better levels for MAPA India. Emphasis on the other hand, I think it's an excellent chart. The stock has managed to do pretty well over the last 6 months or so. We saw the IT rally picking up from, I think, second half of the month of May or June 2024, and from there even stocks like Infosys has done reasonably well. So I believe that that's a stock and that's a chart which is looking attractive, would continue to suggest to stay bullish on Infosys at current levels. But for MAPA India, maybe buy on dips closer to 2000 could be a better strategy.
All right, that's the take on MAPA India. But the next query that I have, Gorang, is on Aptus Housing, wherein Mohit has bought 150 shares. His buy price is 347 rupees. Wants a long-term view on the same.
So if I'm not mistaken, we had coverage on this one, if I vaguely recollect, to be very honest. But on the fundamental side, currently we have not covered this particular stock. Difficult for me to take a call right now.
All right. So we'll give it a pass then. What about Voltas actually? Gautam from Mumbai wants to know about Voltas fundamentally and technically. He wants to know whether it's a good price to buy for the next 12 to 18 months. Kunal, that you will be able to answer. But fundamentally, do you think that this is a bet that he should take right now actually, Gorang?
Yes, we can definitely. We have coverage. Let me give a disclosure over here, Cheryl. And, the problem with this company sometime back was their operations in the Middle East. But that has got sorted out. Then they acquired a couple of companies, which has added to the product profile range at various categories from entry to mid to a high segment. And the aspirations rather than the demand for ACs, is always going to be there given the kind of climate change that we are going in. So your metros and tier 2, tier 3 cities will definitely have traction of demand. But the aspirations of semi-urban and rural India, the folks, they have gone to the next level. So the demand is going to be more suitable from semi-urban and rural India, which will then support, companies like Voltas in terms of white good appliances. So wait for a dip. Market is not going to run away anywhere. You definitely can start at current levels, and on dips you can go on adding to the stock from a long-term point of view.
All right, Kunal, what's your take coming in on Voltas then? Well, technically, do you think this is the right price? What's the right price for Voltas?
So I think it's a good stock to hold on to, but not a best price to try and buy the stock, because given the market circumstance right now, I think it could be prudent enough to try and shift your strategy. So in a rising market or in a very strong market, we generally tend to recommend stocks which are on the verge of a breakout. But when the markets get a lot more volatile, it's always best to try and wait for these stocks to come back into their support levels or maybe fall slightly below their support levels, and then look to buy back into these names. So I think if you're looking to buy Voltas, my sense is that a better buy price could be closer to 1700, 1750 levels.
All right, that's the technical as well as fundamental take coming in on Voltas. But Gorang, the next query that I have is coming in from Veni, who is a senior citizen and holding 2,800 shares of Bank of Maharashtra, and his buy price is 63 rupees. He's at a loss in this one, and he also has 1,000 shares of SJVN from a price of 153 rupees. Can he hold both of these right now, or maybe look to average any of these?
Just when you are a senior citizen, you need to be very, very careful in terms of your stock idea picking. You should definitely avoid, small cap, micro cap stocks, especially the ones which have got a little bit of difficult history of earnings. I'm talking about specifically of Bank of Maharashtra. We don't have coverage on either Bank of Maharashtra or SJVN. But we do have coverage on some public sector banks, likes of Indian Bank, State Bank of India, Bank of Baroda, Canara Bank. These are the PNB, for example. So, these are more relatively stronger banks wherein you can focus from a long-term point of view. And you will have opportunity to, have a decent amount of profit with that kind of a time horizon. For SJVN, this was one stock along with, I think, NHPC, if I'm not mistaken, which stayed in a hibernation zone of around 30 to 60 for a pretty long period of time. And then, of course, we had the entire, power generation policies getting changed and implemented at ground level. And then, of course, the growth of these companies. So this is also a government company, no specific comments. But if you're looking at power generation, then I think Tata Power would be the best company. There are news flows like it has unfolded this morning with respect to Tata Sons. I think these companies are much better for especially senior citizens. You need to be careful what kind of stock picking you do.
Absolutely, actually, a very pertinent point, Gorang, that you've made, that your stock selection has to be very crucial and critical when you are actually taking a long-term bet, and especially if you are a senior citizen. Let me take this next query then. This one is coming from Manish, but to you only, Gorang, because Tes Networks is the counter. 2,500 shares at a price of 400 rupees per share, can hold for long term, and his long term is 5 years.
That's pretty long. I mean, it's good to hear this kind of, in time horizons, Cheryl, to be very honest. So we used to cover Tejas at one point of time. Our targets are in place. We have not taken it forward. But, undoubtedly, it is one of the strongest companies in its space with peer competition nowhere nearby in terms of comparison. And the outlook looks very, very strong in terms of earning visibility, given the kind of opportunities that lies ahead with the policies that the government has put in place. So it is one of the best suited companies in this particular sector. Won't give specific comments in terms of buy, sell and hold since we have not continued with our coverage.
All right, so that's the take coming in on Tes Networks. But with this, viewers, it's once again time to slip into a very short break. Don't go anywhere. We'll be right back.
Welcome back. You're watching Buy Now, Sell Now on ET Now. Let's continue taking all of your stock-related queries then. And this next query that I have is coming in from Prathamesh. He has IFL Securities, Kunal, and this one has been in news. 300 shares at a price of 135 rupees per share. He wants to know whether he should hold or book profits. And if you say hold, then he can hold on for the next 6 months.
See, hold on to the stock as of now, but keep a trailing stop loss. I think 400 could be a good trailing stop loss for the stock approximately. This has been the trend for IFL Securities over the last, I think 6-7 months, where the stock has been, rising up higher, but it's failed to cross significantly or close below the previous monthly swing lows. So I think if the same trend continues for another few months, you might probably expect the stock to rally up further higher. So I think in that context, it's always better to have a trailing stop loss. In this case, I think approximately 400 could be a good trailing stop loss for IFL Securities.
All right, Kunal, once again coming to you because Padma Siva Rao wants a near-term target on Adani Power. He's holding 10 shares and his buy price is 600 rupees.
So I think the near-term outlook for Adani Power is still on the downside for the stock. It's fallen below the long-term averages. The trend is weak over the last 6 odd months from a high of 870 approximately in the month of May, June. The stock has fallen down to 600 levels. So I believe in the near term also, I would expect the stock to get into a bit of a pressure mode. Short term wise, you might probably expect the stock to come back to that 625, 650 levels over the very near term. So if you're looking at a slight better exit, I would believe that maybe closer to 650 odd mark could be a better exit for Adani Power.
Alright, so that's the take coming in on Adani Power. Gorang, let me come to you. I have this query coming in from Ajay. He's asking about your view on Ola Electric. I'm not sure, but just if you could recap, did you have a bullish view on Ola Electric? Because he wants to know if you did have, would the stance change now for Ola Electric, or you feel fundamentally it is worth being bullish on?
So it's going to be very, very challenging. Let me say this, Cheryl. And as a disclosure, we had a subscribe to the IPO of Ola Electric at between 72 and 76. We had advised to subscribe at a higher price range of about 76 rupees. There was a lot of euphoria which was not needed once it got listed, and we know the history after that. People forget the kind of numbers that this company has. 1,500 crores loss, correct me if I'm wrong, Cheryl, and it is going to take a long time for this company to overcome that. At least about 2.5, 3 years maybe. If things go well as per what they have planned, and there is not going to be much competition during that particular time frame, which I will beg to differ, because there are going to be a lot of competition, especially in the two-wheeler EV segment with respect to scooters and e-bikes. Point number one. Point number two, the bike that they launched this year on August 15th, if I'm not mistaken, the delivery is going to happen possibly somewhere this time next year. And during that time, you are going to face a lot of competition. There are lots and lots of issues with respect to the service of the product that they have manufactured, especially with the Ola scooters. We have read that on social media, we've read that on various print media, and their inability to address that particular issue. So when you are caught in that kind of a situation with a 1,500 crore loss, again, I stand to be corrected if I have read that number right. I think it's going to be pretty long journey if, with respect to the road to recovery is concerned. So if you expect that next 6 months or 1 year things are going to change for Ola Electric and you're going to see the share rally, I think you are possibly mistaken.
All right, that's the take coming in on Ola Electric. Yes, indeed, there has been a sharp correction in the stock of late, and Gorang also highlighted the factors at play for this one. We're moving on to the next query then, and Kunal, the next query is from Kamal, and he wants your take on Mazgaon Dock. Any good price to buy this counter, and how do you expect the stock to perform in the near term as well as in the long term? What's your take on this?
See, long term wise, I'm very bullish on these stocks, PSU names, because my sense is that these stocks have gone back into a very strong uptrending mode. So yes, these stocks over the last 4 months have gone through a 30%, 50% odd correction. I think GRSC, Cochin Shipyard, they've gone through a slightly higher phase of correction as compared to Mazgaon Dock. But I believe that long-term charts are very attractive. My sense is that you should look to buy the dips from a longer-term play. I would not suggest to buy the momentum into these stocks. Like in the last 1 week or so, we've seen these stocks rallying up by 10% to 15% broadly from the previous swing supports. Would not suggest to buy these stocks on momentum, but whenever these stocks get back into a corrective phase and fall back to their previous support points or very close to those levels, that's going to be a very good level for you to average or add further.
All right, this next query that I have is coming in from Chandrasekharan. Kunal, for you once again, Ashok Leyland, 700 shares, average price 198 rupees per share. He wants to know what should he do, book profit or exit. He can hold for 6 months.
See, I would suggest to book profits over here. Now, I understand that the stock is still trading much above your cost price, but looking at the recent charts, my sense is that the stock may at least fall below its 200 moving average or slightly below those levels. So I think if you can look to book profits over here and buy back in case if it comes or drops back again to that 200 or sub 200 levels.
All right, that's the day coming in on Ashok Leyland. But with this, it was the last query that we could accommodate in Buy Now Sell Now today. Thank you so much, Kunal, as well as Gorang, for joining us today and helping all our viewers resolve their stock-related queries. But with this, it's a goodbye from me and Cheryl and the entire team who put the show together. Thanks so much for watching, but don't go anywhere. Markets at noon will take the action ahead.
There comes a time when your heart calls for you to arise. Plant your feet solid into the ground. Decide your own limits. And then break right through them. Become something more. It's my time to rise.